Hi all, welcome to Diversified Finance. My name is Lakal and today I'm going to go through this article and the heading is How Ordering Too Many Uber Eats Can Damage Your Home Loan Chances. Uh, in September, I explained 9 reasons for Australian housing market downturn, and the first reason being tighter lending. So we are going to see how tighter the lending is right now. We can actually, we never thought we are going to see any articles like this. So let me read through so we can get an understanding how tight the lending is at the moment. In the current financial climate, everyone move you make is being scrutinized, with even your dinner choice having an effect on your future lending potential. Personal spending habits on this, like clothes, holidays, and takeaway foods, are becoming a factor when a bank considers a loan application. With increased scrutiny into the banking industry and tighter controls on lending, obtaining finance a real issue for the prospective homeowners. The banks are simply not lending anyone any money. It's across the board. It's first, second, and third home buyers. These people can't get funds. In the past, bank would work out a multiple of your income less your big stuff like card debts and exposure to credit cards. Now they are looking at your bank statements to see how often you have takeaway food. Yeah, so I really wish banks been doing this from the start, from 5-10 years ago. So back in the day, it was easy. Credit was easily available because of easier lending. Credit was available to anyone. Anybody can get a mortgage, regardless whether they cannot even pay the first repayment. So because of that, it's been happening for so long. That's why we've seen $1 million median house price in Australia. It got to a level that nobody can afford to pay it anymore. And then because of the Royal Commission, now they have been really tight on lending. But I wish they've done it from the start, so we wouldn't be in this situation right now. Anyways, let me continue from where I stopped. APRA won't increase scrutiny on the amount of banks are lending to homeowners. So the balance has shifted. The banks haven't changed their guidelines, but they are just applying them far more stringently now. Despite this, though, Jamal says Australians can ensure they do not run into credit problems by following simple rules: being prepared before applying for a loan, and making easy changes to their lifestyle in months proceeding to credit card application can make all the difference. The most practical advice we can give is make sure you are organized before you apply. Understand that everything you do is going to come under more scrutiny. It's not just a simple process anymore. Technology has been a real game changer. No one uses cash, so everything can be tracked when you use your cards. Make an informed decision before you buy, knowing that someone is watching you. Most people are hearing about problems post applying for a home loan, and an issue has come up in a credit check. You can't do much about it then, but you can be better organized and make small changes before you apply. If you are a day late paying your credit card, if you overdraw your account, that is all reported and that affects your credit score. Simple changes can make huge difference. If owing a home is important to you, make it a priority. Yeah, so as it explains, nobody uses cash anymore, so every transaction you do, they can go through it, even if it's a different bank account. Say you're gonna apply for a home loan from Cornell Bank, but you have a everyday account with ANZ, but they still can go through your, they can ask you to, like, bring one of your transaction history, go through transaction history, and they'll get to know what kind of person you are, how good you are with money. Like, are you like are you one of those people, like, the majority is like that. So one of those people who gets paid $5,000 a month, and you spend, like, 4,990 out of that, like, without having any savings. So they can go through a transaction to figure out whether you are good with money or not. So it's simple, because all they got to do is go through transactions, because people hardly use cash these days, and every transaction you do, it's been recorded. And yeah, even if you late on a credit card payment, like, a minimum pay, if you don't pay your minimum payment on time, it'll be recorded, and that could affect your credit score. I mean, who knew, right? I mean, back in the day, like, I remember probably a few years ago, like, you just go up to the bank and you tell them, okay, this is how much I get paid. Like, you just give them your pay slips, and you tell them, okay, this is my just fill in the application form, voila, you just get your application approved. Like, and we've seen so many people, like, bidding for one house and they already got, like, pre-approval for like 6 months. Not the case anymore. So things are really tight at the moment. Look at this, like, I mean, they even go through your transaction history before they lend you money. So getting a home, getting a loan from a bank is really tight at the moment, as you can see right now. So they talk about, like, few things that you can that you can do, like, before you apply for a home loan. Back in the day, you don't need to, like, prepare yourself, like, before you apply for a home loan. But right now, 6 months in advance, 6 months in advance, looks like you have to make sure, like, you're not going to spend too much on you don't use, like, like, you're not going to eat out too much. So in a way, this is good. Like, this, like, now if you want to apply for a home loan, looks like you are forced to financially disciplined, right? So it's like this is like the banks are forcing you to be financially disciplined. So I mean, you're not going to spend money carelessly. Okay, the first one they talk about is be organized. Go to the bank with as much information as possible. Include expenditures, discretionary income, school fees, and other costs. Yeah, so make sure you're aware of your expenses. Minimize your expenses. Once issues are discovered in a credit application, it is difficult to overcome them. Work on minimizing unnecessary spending in the months prior to applying. Less Uber Eats could have a significant impact on your chances of approval. So look at it. It looks as if, like, they're asking you to make your own sandwich, right, just to save money, which is a good thing in a way. But I wish people I mean, it's hard to change, but once you get hold of it, I don't think it's gonna be something that's something really hard to do. Like, if you make your sandwich, like, your lunch the day before, right? Of course, you don't need to spend $20-30, like, for lunch when you're at work. So which will help you to save a bit of money. And compulsory credit reporting. In place since July 2018, all banks have responsibility to put all the information into a personalized credit file, giving them more information on customers and impacting your credit score. If you are a day late on your credit card, it's reported. Okay, so it doesn't matter whether your salary goes to, say, Commonwealth Bank, but you have applied for a credit card from a bank outside of from another party, say ANZ, right? Anything regards to your name, anything under your name will be reported. So there'll be like one credit file for one person. So it doesn't matter, like, you have 3-4 credit cards with 3 different institutions. Everything is recorded under your name. So you cannot say, when you apply for the for a home loan, you need to disclose that you have a credit card with another bank, unless they'll get to know it. Technology tells all. Everyone of your transaction is being tracked, and it could come back and haunt you come application time. You may regret the $300 you spend on clothes. Yeah, so this is pushing people to save money. Like, you know, I mean, in a way it's a good thing. Like, you know, saving money is a good thing. Like, you know, if you earn $5,000 a month, and then if you spend 4,990 out of that, I mean, you rely so much on your job, right? And then you won't have any money, extra money, like end of the year to invest, right? Meaning, like, you know, you have to work like, you know, until you're 65 years, 67 or 70 years old, and that's the only way out of it. Like, you know, getting old, like, you know, working for any company, like, you know, paying off your mortgage, that's the only way out. But if you save, save part of your salary every month, and when you have like a bit of a end of the year, if you have a bit of money saved in a separate account, you can use that money and you can invest that money and use that money to make money for you, rather than working for money until you get to 70 years old also. So yeah, so the last one being afterpay evils. Credit schemes like Afterpay are classified as a debt and can be viewed in the same way as a credit card. Similarly, if you miss a payment and are charged interest, it could be potentially viewed as a default. Yeah, Afterpay are classified as debt and can be viewed as same way as a credit card. Okay, so Afterpay, they're gonna looks like they're classifying Afterpay as credit card. So if you have any Afterpay credit schemes like Afterpay, make sure, like, you know, you paid on time, otherwise it'll be reported, and it goes to your credit score. So if you miss a payment and are charged interest, it could be potentially viewed as a default. Yeah. Okay, so that's all. That's the article. So there you go. Like, you know, I mean, I don't think, like, you know, probably a few years ago, I mean, last year, maybe 2006, 16, 17, nobody thought it's going to be this hard for us to get a loan. Look at it now. I mean, before you apply for a home loan, looks like, you know, 6 months advance, we need to start preparing ourselves, like, you know, before we apply for a home loan. So we never thought it's going to be this hard. So I'm going back to this video that I've done a few months ago, and see, now we're already seeing how title and lending could affect the housing market, because when the lending is tighter, like, there'll be less buyers, less borrowers, meaning there'll be less buyers. So if there's less buyers, if the supply is going to increase, if there's more people willing to sell, there'll be less people to bid for your house, meaning higher supply, less demand, less buyers. That means, like, you know, the house market has to come down. Okay, so that's it for today. I'll talk to you guys in the next video. Thanks for your time. Bye.